Macro, macro, macro. That is the theme for today's show with Peter Dunworth of the Bitcoin Advisor. People seem to love these shows, and as long as you keep enjoying them and sending me good feedback, I will keep on doing them. Today, we got into a whole bunch of things, from energy markets to inflation to Larry Fink's endorsement of Bitcoin and what that means for financial advisors across the world. But most interestingly, you'll be keen to hear a little bit about the money multiplier effect. The idea that it is not correct to believe that a dollar flowing to Bitcoin will increase its market cap by a dollar. There's actually a multiple there, and that has significant impacts when it comes to future price projections. Of course, because we are now at the beginning of what feels like a bull market, we got into some price predictions for the next 18, 24 months. And I think you'll be keen to hear some of those figures because best case, we're styling. Worst case, I'm happy. Either way, I'd love to hear your feedback. On a separate note, we've got the Bitcoin Bush Bash happening in November later this month in Murrurundi. I'd strongly urge you to go if you've never been to this particular event. It's about Bitcoin and stake, and I say that lightheartedly. It's actually if you want to tune into the Bitcoin culture, that's what it's really about. If you really want to understand the people behind Bitcoin, it is an absolute must attend event. That's all for today. Cheers, friends. Keep well.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There is no second best crypto asset.
Hello, friends, and welcome to the Why Bitcoin Show. I'm your host, Dale Warburton. It's a weekly podcast on why Bitcoin matters and what makes it completely different to all other cryptocurrencies. If you're interested in Bitcoin and you'd like to distill crypto fact from fiction, you've come to the right place.
Okay, so we were talking about the rugby, and I was just saying, I honestly shed a little tear. I was so pumped because the country needs it, Pete. That's the main thing. It's like going, if you lived in a place where there's just like perpetually bad news, and despite the best efforts of some politicians to like divide people, you've got this group of individuals who pull together from diverse backgrounds. You know, like literally the captain used to live in a township, and then you got private school boys there, and you got the full sort of range of people there. And they all just got together, and they've got this amazing kind of mentality of like, we don't play for ourselves or even our coaches. We're playing for like the nation. And it's just like, anyway, so watch the rugby, shed a tear, had a South African braai with some boerewors, shared it with a fellow Bitcoiner, big dreams, Paul. And then in the evening we watched Invictus. I don't know if you know that movie with Matt Damon. So we, like by the end we were just full of South African vibes. It was just like it was a magic thing. Tell me this though, from your side on the sports, you know, in like people in Bitcoin talk about sports. There's some opinionated folks out there who go like it's all bread and circus shit. You know, like it's a distraction. Like, are you into any of this stuff?
The rugby?
Well, not rugby or any sports. Like, do you think is sport just there to distract the masses from what the puppet masters are doing or what the politicians are doing or whatever?
Hey, you know we're not recording this, right?
No, we are.
No, we're not.
It says recording on my side.
Really? Okay. Well, as long as you're recording, I'm happy to come back and do it again if it's not.
I hope to help. There's going to be some editing work here for my man.
Yeah. No, I think the bread and circuses are important because if there's no bread and circuses, then there's war. And this is what we're seeing at the moment. So as frivolous as, you know, a Rugby World Cup or even worse, a Rugby League World Cup is, I actually think they're really important because, you know, it's a way for young men to compete and assert dominance in, you know, a framework with a set of rules where everyone gets to live another day. And, you know, the framework that we're seeing and, you know, set up in Russia, Ukraine, and then, you know, the Palestinians and the Israelis, you know, there's going to be a lot of young men killed who are, you know, have a lot of testosterone to get out and, you know, really want to kill people. And, you know, on a rugby pitch, a football paddock, you know, boxing match, MMA, you name it, you know, there's a lot of great outlets that allow people to, you know, release that pent up aggression and anger, but, totally. You know, can come back the next day and, you know, live another day. So I
Yeah.
think it serves a really, really important purpose. And although a lot of Bitcoiners don't think it's important, I actually think for social cohesion, it's a great way to vent.
Yeah. 100%. It's got a weird way of, yeah, how that sort of outlet for, and let's be honest, it's mostly like young males
Yeah.
who have a sort of a tendency to be more violent than women on average. And it is a positive outlet. So a lot of the guys in the world of MMA were just street fighting, and they were like, holy shit, I can get paid to do this kind of thing. And that's how it all started. A lot of these guys grew up super rough. You're not finding guys from like Eton and these places, you know what I mean,
Yeah.
competing. It's just like, it's people who've had like difficult circumstances, and they find a positive way to plow their energy, to put their energy into something like positive.
Yeah.
And absolutely. And aside from that, the social cohesion, as you say, is big, because when we had the World Cup in 1995, this was literally just after the democratic election, where there was just tons of bloodshed between warring tribes. White South Africans were stocking up their fridges or their cupboards with canned goods and shit. I mean, this is like, the country was at it was touch and go. Like, is this actually going to work? And it really brought us all together. And then we saw in 2010 with the Football World Cup, there was just so much good vibes. So I love it, man. And it just, yesterday was just, it was just magic. A magic day, a very, very memorable day, I must say.
Yeah, well, one for the record books. And, no other
Indeed.
nation has won 3 Rugby World Cups. Congratulations, South Africa.
Indeed. Now, Australia, you better get your shit together. You got 4 years to out. But anyway, so some people are probably listening and going, this is sickening. We don't want to talk sports.
Let's get to it.
Pete's the macro man. So I want to talk a little bit of macro. So, I thought, look, let's have a look at what are some of the key indicators, and then perhaps you can talk to what you think these things might actually mean, what they're indicating. So I actually noticed, and I don't keep track of gold's price, to be honest, but I noticed that it just broke $2,000 an ounce, and that it's up 18% over the past 12 months and 10% year to date. So gold, the sort of tidy Bitcoin, if you like, has actually done quite well. The S&P has retreated somewhat from its mid-year gains, and that's only up about 7% year to date. Bitcoin's, of course, up 67% over the 12 months and 107% year to date. And then, we've got the 10-year treasury at just over 5%. And I had a look at the S&P aggregate bond index just to see kind of what the performance would be. And it's up a whopping 0.81% over 12 months and down 1.5 year to date. So, if you look at these high level sort of figures, what are they telling you there?
I think it's a very confused market. Like, it really is a confused market. The other one that didn't really get much play in that, but I'm not sure if you can pull the figure up or not, is the Dixie index, the US dollar strength index. If you can find that and pull it up, because that'll be a real contra indicator relative to gold, because I think the Dixie in the last 12 months has gone up, or it'll be maybe flat to up or marginally down, but it's pretty flat. And when you've got gold ripping 18% a year, that's sort of a real harbinger of something's not quite right. There's a lot of mixed signals in those two that I look at. A US 10-year treasury at over 5%. If we had that conversation in March last year, that's 18 months ago, people would have scoffed at you. Like, no way on earth, like things would break. And to put this into perspective, 18 months ago, there was talk that 15 to 20% of the S&P 500 was effectively operating as zombie companies, only existing to pay interest on their 2% corporate debt.
Wow.
Fast forward, that US 10 years at 5, and the corporate debt, if it gets re-rated today or refinanced, comes back to being 7 or 8%. So if you have a look at that, Dale,
we got for those who aren't watching, it's the US dollar index, or the Dixie. Yeah, tell us what we're seeing here over the 5-day. How long do you want to have a squiz at there, Pete?
Do a year, because we got gold over a year. We've got pretty much all of them over a year.
There we go.
So it's gone from, say, 112 to 105, but it dropped down to 100. And in the last, say, 3 or 4 months, it's absolutely ripped from 100 to 106.
Yeah.
106 and a half. And to tell you the truth, that's actually strengthening. And what's really interesting is if you look at the last 4 months, the gold in the last 4 months has basically ripped, and so too has the US dollar index. So what's that telling you? Normally those two work in complete opposites. They're, inversely correlated.
Right.
The US dollar ripping at the same time gold's ripping tells you something's not quite right in world markets. And
Yes.
I think it comes down to a complete misunderstanding of how in demand the US dollar is. So everyone's still talking about BRICS and the rest of it. It's like, God, like, yeah, I understand, everyone's want and desire to get rid of the US dollar as the global reserve currency, but that's just not indicative of what's happening. If you look at the last 4 months, the Dixie going from 100 to 106, 106 and a half or more, and it's probably on its way to 110, 120. Oh my God, that's absolutely ripping. And that's the US dollar wrecking ball that everyone knows about, where it's just going to cause absolute carnage in global markets. And to be fair, that's probably what the Federal Reserve wants, because, who does it affect more than anyone else? It basically affects non-US citizens, because the US citizens get cheap goods when the US dollar goes up, but everyone else who's got US dollar denominated debt and has to basically meet payments across the globe in that, or, global trade finance, needs to be met in US dollars, they've all got to pay, 6, 7, 8, 10% more than they did 4 months ago.
Yeah.
All of a sudden, that's a big problem.
And then, okay, so you've got that situation where sort of gold and the Dixie are doing something that's somewhat of an anomaly, where they would typically move it sort of in opposite directions. Now you've got also a situation, from what I can tell, maybe you correct me, but it seems as if Bitcoin is slowly decoupling from some of the narrative of being like a high risk tech stock. There was that strong narrative during the bull run 2020-21. I wonder if that's, with Larry Fink having recently said there was this flight to quality, and that's partially why he saw Bitcoin rip. Is that happening in your mind, that there is now this decoupling, and it's finally going to be looked at as something perhaps that's less risky?
I think that is the case, and I think it's just a number of factors converging to be convenient at the time. And this is where Larry Fink saying Bitcoin's a flight to quality is a huge signal in the finance world. That lets every investment advisor off the hook as far as advising on it. And the big thing about that is, and I might sort of go back and sort of put this into historical context, most financial advisors, investment advisors, are typically setting a portfolio up for, a 5 to 10 year outlook. When you're looking and investing in stocks, you need to look for the long term. It's really hard trying to pick, short-term trends, and you really want to pick, long-term cycles that you think are going to outperform over a 5 to 10 year period, because it's a much better way of investing. You get chopped in and out of trades left, right, and center when you're on much shorter time frames, and you're really at the whim of the market, the traders. You basically get chewed up and spat out on the shorter time frames. The only way to outperform is to have a much longer time frame for this. The volatility we've seen in the markets, both up and down, and the chaos that we're seeing in the treasuries market, mean that it's very difficult for investment advisors to take a long-term time frame because of the volatility. The volatility means it's very expensive to price, what's going to happen into the future. And it's very difficult, and this is something we've struggled with, is, setting portfolios. For the last 2 years, we've really struggled to set direction for the portfolio that we think is going to outperform on a 5 to 10 year basis, because the volatility has been there and there's really been no clear direction. We've had mixed messaging from the markets. We've had rates ripping through the roof. We've had the treasury market still trying to do what they can to, appease everyone globally as far as liquidity goes. Those two are literally the akin to, slamming on the accelerator while jamming your foot on the brake. Mixed messages. We can't get a clear direction as to what's happening. And then when you put Bitcoin into the context of what Larry Fink just said, Larry Fink literally is responsible for the ESG movement being incorporated globally across the world markets and ingratiated into all corporate life. This guy is so meaningful when it comes to moving markets. He has just literally, anointed Bitcoin as a flight to quality. And this is at a moment in time that needs to be put into perspective. You've had the last 2 years in long-term bonds has been the 2 worst years in the last 240 years from a performance perspective. So when you put this into perspective, in the last 2 years, long-term bonds are down over 50%. Peak to trough, Bitcoin's down less than what the long-term bonds are. And bonds are meant to be the risk-free asset. And this comes back to, there's no such thing as a free lunch, and bonds really aren't as risk-free as everyone thinks it is. In fact, if you held long-term bonds, you're down over 50%. And Nick Carter put together a nice little infographic in the last week where he said, basically, off its highs, long-term bonds are down more, US long-term bonds are down more than Bitcoin.
Wow.
That seems crazy. And then when you couple that in context of, the kingmaker in Larry Fink anointing Bitcoin as a flight to quality, all of a sudden we have investment advisors off the leash to, I thought they'd be putting allocations of 1% to 2% in for their clients. But if Larry Fink anoints it as a flight to quality, they could have 5, 10, 15% of their entire client's portfolio invested in Bitcoin. That's a very different proposition for 1% to 2% as a bit of a hedge.
100%. And it's just amazing how rapidly the narrative has shifted. And I haven't been in the space for long enough to endure the endless FUD that's been thrown at it over the years. But, it was very clear in 2020 and 21, the ESG was probably one of the bigger concerns that were raised. Just on the regular, I would be coming, across articles, it boils the oceans, it consumes more energy than this country, and slowly but surely those articles are reducing in number. We did see some pretty bad reporting out of the Wall Street Journal recently about what percentage of Hamas is being funded by crypto and all that, and just like apparently I don't know all the details, but when they looked in, it was very rudimentary, pathetic analysis. And so you're kind of thinking to yourself, okay, we've got potentially a little bit of a decoupling happening here. We've got the biggest fund manager on earth effectively sort of rubber stamping Bitcoin. We know that there's an ETF that is almost certainly going to be approved within the next 6 to 12 months. Sort of the conditions are looking really good from, I guess, a Bitcoin price perspective. And then I thought before we jump into, I guess, pricing, and then what I really want to talk about is the money multiplier effect, I want to just chat a little bit about inflation, because I want to walk through some thoughts I've had. And again, this is obviously a layperson's sort of thoughts, but I've heard Lynn talk a little bit about this, old Lynn Alden,
that one,
my macro guru. And, sort of when I think of, so the current situation in the US is that inflation, or official, inflation, is 3.7%. So you're looking, okay, well, why don't they just lower rates? Because as far as I can tell, like, they can't raise rates without making the debt too expensive, because their debt to GDP is too high. But the economy is too hot for them to lower rates, because it'll just fuel inflation. But here comes the inflation problem. Inflation is sort of multi-vectored, and you've got sort of monetary policy that can impact, I guess, inflation if inflation is being driven by cheap credit. So that's like number one. Then you've got kind of demand side, like structural changes to demand that can impact inflation. And then you've got supply issues that can lead to inflation. So it's like, how the hell do central planners think that they can actually take the millions of inputs and variables that go into a functional free market economy and actually kind of say, well, we can tip it this way, and we'll get the right result? I don't know. There's a lot in there. It was a little bit of a ramble and a rant, but it's just like, I'm trying to make sense of it all.
It doesn't make sense. And that's the problem. You look like a lunatic trying to make sense of this thing that's nonsensical. Don't bother. Even as someone who looks at markets all day, every day, I've given up. I'm like, you know what? They're not even trying. Like, the numbers they put together are just, that old joke about the accountant, what's 1 + 1? If they're any good, what do you want it to be?
Yeah.
Even the Federal Reserve's putting that shit together now. And I thought that was typically a third world / Chinese economy type thing. But, that's come to Australia and the US, and, basically everyone's putting together the numbers that whatever you want to hear, they'll put those numbers together. And this is where it's particularly disappointing, because, you've got inflation numbers running hot. These, central bankers, they're really smart. They've got so many levers we don't even know about. And, they just talk about the ones they want us to know about. And then they'll, pull a Swifty, and it's like trying to beat the casino at the roulette table. They've got so many tricks up their sleeve. We don't even know what they've got. So, I mean, the point of us debating it and trying to figure out how do we get an edge on them, it's like, it's like trying to beat the bank at the casino. No chance. You can't do it. And I sort of sound a little bit despondent thinking about that. But the other thing with this is that there are so many other variables with this whole inflation number. The Federal Reserve, the Reserve Bank of Australia, is literally turning up to a gunfight with a knife, or maybe even a potato shooter. Like, there are so many variables. It's like pew 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 pew. Like, it's just not working. And the funny thing that on these inflation numbers that I don't really hear about, and I don't hear about it in the US, I don't hear about it in Australia, but we've got, we're trying to get inflation under control, and no one's talking about 1.5 million people coming into the country in the next 2 to 3 years. I'm like, we've got a population of 25 million, and we're importing 1.5 million workers into our country. And what do you think is going to happen to goods and services? They have to go up because we've got roughly 10% of the population buying more oil, more gas, more wheat, more dairy, more meat, more everything. And it's like, well, it's so disingenuous for the Reserve Bank and maybe of Australia. This is maybe some pushback, from our new governor to say, well, why am I putting interest rates up when you're cramming, immigration down our throat? And the immigration down our throat probably has a far more inflationary effect than them putting up interest rates can stop the inflation. So I can understand why she's a little despondent and sort of looking at Chalmers thinking, what are you doing to me? Like, you want me to get this under control, and you've opened the borders, and there's 1 million more people coming in. That's a far greater inflationary effect than putting up the interest rates to dull that inflation. So
yes,
it's not going to solve the problem, but what it's going to do is cause an immense amount of pain, and it's going to put a lot of people out in the streets. It's going to force a lot of people into mortgagee sales that just can't afford to live there. They're going to have to go and rent. Rents are going to go up. Cost of living is going to go up. It's we're in sort of a vicious cycle at the moment that's going to create a whole host of social problems in the next couple of years if we keep going the way we're going, and there's no end in sight for it.
What's the motivation for importing so many people like me? Economic growth?
Yeah, economic growth.
At the cost of living.
Yeah, that's fundamentally the trade-off. Like, you look at all of the infrastructure assets that are kind of priced like bonds, and we used to use those in portfolios as a bond proxy because they kind of acted like a bond. You'd have pretty set income streams from them, but you'd have a real world asset attached to it that would go up in value. But now you've got the cost of capital has gone up dramatically. All of a sudden the yields on those come down, but like, if you look at the most simplest of, say, infrastructure assets would be a highway with a toll road on it. If you increase the population by 10%, ideally you get 10% more tolls.
Yeah.
So, that asset goes up in value because there's more throughput, and that goes with any part of the economy because there's more people, more purchasing, the rest of it. And we're kind of fudging our GDP numbers by, importing people to bolster those numbers. But if you look at the efficiency per person, it'd probably be a lot less than what it was.
Wow. Yeah, it sounds like it's quite a dire picture. But then when you want to compare that to, the UK, which is in double-digit inflation, and then I guess a similar but different scenarios playing out in the US, where those who bought in 2020, 21 at the rock bottom interest rates, they're not going to move. And so now you've got this weird situation where inflation has run hot, like wage growth has kind of remained really stagnant. People are struggling with, people are not able to actually buy new homes because in the States now, rates are nearing 8%. I can't remember. It's the highest number in how many years? Like, it's a couple decades or something like that.
I would have thought it'd be close to 15.
Yeah. And, it seems as if like there's almost this inevitability, at least here in Australia, about how this all plays out. But I mean, is it not the case maybe that Australia is kind of the cleanest shirt in the dirty laundry? Like, I'm not looking at Europe and going, well, that's a rosy picture. So
I know. I wouldn't want to be there.
Where do you want to be? Like, I've got a sister in New Zealand, and it's like, it's hell there in terms of the, cost of living is really bad. And then housing is obscenely expensive. And, half of the millionaires living in China seem to have bought in Auckland. So it's like, Yeah, anyway, I'm just kind of rambling on again about the cost of living, but it just seems as if this is almost like some sort of broad theme that's going to play kind of writ large across the developed world. And you can imagine emerging markets are probably even worse affected, but in different ways.
Yeah, I definitely wouldn't. I think it's a great point you raise about Europe. I definitely wouldn't want to be in Europe.
Yeah.
Europe is, basically self-immolating there. That's, they've ruined their energy policy. Here's a little known fact that 5 years ago, maybe 6 or 7, they were a net exporter of gas.
Wow. The whole of Europe.
Continental
Wow.
Europe, not Russia, continental Europe. Let that sink in for a second. And their energy policy said, we don't want this fracking. We don't want this dirty gas here. We'll buy it from the Russians. And then, probably the US blew up the pipeline, and all of a sudden they've got no energy. They've turned their nuclear off and they're relying on wind and solar. And, it's costing them a fortune. And this is going to be particularly unpalatable for a lot of people to listen to, but you go and check your numbers here. But the problem that Germany faces is that they've spent nearly 500 billion on building out their solar network, electricity grid, and they've built it out to 130% of grid capacity. So by default, the solar capacity, of their grid should be enough for all of Germany to consume green energy. But if you look at the consumed energy versus the producible energy of what the figures say, only 6% of consumed energy in Germany was from solar.
Unreal.
So they've spent $500 billion on solar farms to produce 6% of their consumed energy. At the same time, they're turning off their nuclear. Now, why am I bringing this up? It's kind of a contentious point, but energy is the base cost of everything. The cost of energy is in everything. So we're sitting here wondering, why are things going up and why are people coming in and why prices keep going up? It's like energy. And this is this green revolution that we're paying for in the West that China and India are laughing at us about, because, they're just building coal-fired power plants and they're delivering 5 to 6 cents, maybe 7 cents per kilowatt hour. And we're paying 20, 30 cents per kilowatt hour. Germany's up to 30 cents. It's like, you can't run an industry with 30 cents per kilowatt hour energy. And that's what makes the US potentially the greatest powerhouse from a manufacturing perspective, is because across their grid, they've still got a 6 or 7 cent per kilowatt hour capacity, and they've got 60% of their grid going to ground. They can't sell it, and this is the whole argument about Bitcoin miners coming in and monetizing that. But it's crazy. So it's just bad policy that's costing, all of our cost of living is going up through the roof because we want green energy, but it doesn't even provide baseload power for us.
Yeah, it's and it's funny you raise that, because it's the timing is quite apt in the household Warburton, because I'm looking at solar and
it's free, right? It's cheap.
It's free.
Yeah.
It's like, firstly, okay, so you have to go down a rabbit hole. You got to kind of go, well, I need to figure out how this all works. I get a crowd in. They talk to me for an hour and a half. Brilliant. This is going to, for your house, you need a 13 kilowatt system. That's going to be, I think it was 19 grand. I'm like, geez, that sounds a bit hefty. Then I go to this other crowd. They go 7 grand. And you go like, what's the difference here? Then I speak to another crowd and they go, we'll do it at 10. But if you pay and commit today, you're like, I'm trying to figure out, okay, what are the different products? Like, are there different types of products like that are better than others? I believe, okay, this inverter's only got like a 5-year warranty versus a 10. Okay. And then you start looking, okay, well, we used to get 40, 50 cent rebates per kilowatt hour. And now it's like, at least in Queensland, it's hovering around 11. Okay. So you're like, well, pretty easy to see where this is going. It's going to get to zero. It's going to trend to zero. So basically, I'm going to put all this shit on my roof to ensure that during the day, when we don't need stuff for the most part, like at least it's free then, Pete. Like, I'm not going to complain. But it's just like, I'm thinking, okay, so now I have to think 10 years ahead. I go, I need a battery now. But don't worry.
So now the upgrade to the battery.
Yeah, exactly.
So you can use the power when you need it. Yeah.
God, it's just like, don't worry. The battery is not good now. So I'm not going to try to sell it to you. But in 5 years, 10 years, it'll be killer. And everyone will be driving electric cars, they say. I'm like, yeah, not me, bro. But no, it's I don't want to call it like a scam, because I definitely think that there's a lot of value in having alternative energy sources. But to think that we can run civilization on these renewables that are fundamentally intermittent just makes zero sense. And I'm not even an energy guy, and it's so obvious to me. But obviously politicians sell cheap solutions to people who don't think beyond their nose. And so that's why we have what we have, I think.
Sadly, it's only a rort if you're not in on it. And you and I aren't in on it, so it's a rort.
Oh no, we're on the Bitcoin rort. So yes.
The other thing with that, which is troubling from a social perspective, is that those people taking advantage of those tariffs and green energy and all of the rebates that come with it, it's effectively wealthy people being subsidized by the poor.
Explain a bit more on that.
So, the wealthy people are taking the free rebates and putting solar on their roof because of the social consciousness to put that on their roof.
Yes.
And what that is basically it's a tax on the poor to fund the rich for their free solar or their subsidized. Because if you had to pay for the full freight on the solar, it would be probably $19,000 to $30,000. But because of the rebates, because of the government subsidies and everything else, that price gets whittled down to $7,000 or $10,000, whatever that might be.
Mm-hmm.
Now, how does the government recuperate that $20,000 or $5,000 or $10,000 differential? They basically increase the price of electricity on everyone else. Basically, the poor who can't afford the rebates have to subsidize the rich who can. And it's literally a reverse Robin Hood. Robbing from the poor to give to the rich. There's a good slogan.
Yeah, it's actually quite mind-blowing. And yeah, I'm not even sure which direction I'm personally going to go in, but it just feels like, yeah, it's silly and very frustrating, because in South Africa, and look, South Africa don't do a lot of things well, at least better than Australia. But the one thing is, if you generate your own power, hey, guess what? It's yours, bro. You can do whatever you want with it. You don't have to feed it back to anyone. It's yours. And people literally live off the grid because they go we can't rely on this national provider, because we don't have a free market in South Africa. It's literally just a state-owned monopoly who has no incentive to be profitable or to do anything well or to maintain stuff. So rolling blackouts are just a feature. So people get to put solar on the roof, but at least they get to reap the rewards in the form of actually being able to consume it, and they're not having to kind of, because they'll sell it as you get a rebate and all this kind of thing. But I know when I look at the sort of cost per kilowatt hour, as you say, I've been told I'm getting a good deal at 30 cents. Some people are paying 39, in other parts of the country. So, oh God, Pete, it's ridiculous. But what you said earlier is the key point to nail home here: is energy is the key input cost in almost everything. And so it doesn't matter what it is. It's going to, if energy prices go up, everything else goes up.
Correct. It's just it's a forcing function for prices, and it gets multiplied because energy is the base. And then, you put a margin on that, it X percent above it, and then it X percent above that, and it, multiplies, and it gets out of hand. It gets really unwieldy. I'll tell you what's the most egregious example of this. We may have talked about this already, is the taxes on petrol. So on a $2 litre of petrol, have a guess how much petrol you get if you extract all the taxes and assume you're on the highest marginal tax rate.
Oh dear. See, I want to be super cynical, but I would say at least half of that are taxes.
35 cents out of the $2 is petrol. And let me run this past you. For the $2, 50 cents goes in the highest marginal tax rate. 50 cents in the dollar gets taken out in tax. So one of the $2 is gone. Another 20 cents is gone in the GST, so goods and services tax. So you're down to 80 cents. And then there's a 46.5-cent excise per litre on petrol. So now you're down to 35 cents. Actually, 34.5 or 33.5 cents per litre.
Why did they just round it down to 30 and just call it fun and games tax and the 3 or 4 cents? What's going on?
And you know what? It's even more egregious in California. They take way more on that. And what's really funny is, I don't know if you remember when petrol started going through the roof, and I was in LA 2 weeks ago for Bitcoin, and I got to see the petrol prices there. They were $7.50 at the local Santa Monica petrol station. I'm like, damn, that's expensive. And you've got Governor Newsom calling for, we need to, tax these oil companies more. And you've got Elizabeth Warren, who's just, a brain dead socialist, out there saying, we need to tax these oil companies. They're making too much money. I'm thinking, pardon the French, but holy shit, like just the Californian excise duty on the one gallon of petrol is like $1.50, $1.10. I'm like, Chevron, Exxon, Mobil, take your pick, BP, Shell, they're not making $1.10 per litre of gas they're selling.
No.
But the government of California slaps on $1 tax on every gallon. I'm like, this isn't how the free market works. You know, like it's just like completely insane that people think, oh, that's going to solve the problem. No, it doesn't solve the problem. Makes it worse because you make oil unaffordable. People buy less of it. There's less research and development. There's less exploration. There's less of it coming to market. And all of a sudden, we now have an oil shortage.
Well,
Prices go higher.
100%. I think Luke Groman has spoken about this historically, where he has said that the shale revolution is what has essentially been able to keep oil prices within relative, bounds of affordability. And that, like in the absence of that, we would have seen some obscene prices because they're not making it easier for these explorers or energy producers to actually want to invest shitloads of capital into these projects that have a lot of execution risk at the end of the day. So it's not as if you just stick a thing in the ground and start pumping oil tomorrow, because I believe like offshore drilling is even more challenging and stuff like that. Yeah, it's just like I like to think first principles, and I think to myself, slapping on like excise duty on fuel, you're not doing anything to add value. It's the equivalent of building a bridge, or actually not even building a bridge. That's too much work. There being a bridge, and then you come as a so-called entrepreneur in inverted commas and just put up a toll and go, give me money. And the guy's like, why? I just put a toll up, just shh. And so it's like these hidden taxes. And I often think, like, what do you think? Like, if you were talking, like, let's imagine someone's making 500K per annum here in Australia, which would be a very good salary. Like, what do you think after all taxes? Because, I mean, people can go and look at the income tax, but if you take into account all these other things, like, where do you think what would you say people's, like, sort of average tax rate would be if you're, like, at that sort of upper end?
60 to 70% at least.
God.
So I'll run through it with you. 500,000, you're spending, if you're not saving $1, not saving $1, you're spending your entire salary. You're going to be losing half of it, 250,000 roughly, give or take, in income tax. Call it 200, and then you've got 300,000 to spend. You're going to have at least 10% of that is GST, and then there are going to be a whole host of other hidden sales taxes or excise duties, or if you like drinking, well, there's a 30 or 40% tax on that. If you like smoking, there's a 120% levy on that. Like, there's a whole host of taxes. I think if you're left with 300,000 to spend, the hidden taxes or GST and everything else that you'd end up paying is probably another 100,000. So you're sitting at a 60% tax rate.
Wow.
Like, it's depressing, but that's probably what it is.
It is.
Petrol's got an 85-cent tax on it.
Yeah.
Or 85% tax on it. Like, that's insane.
It seems to me that if you are somebody in Australia earning, if you're like, say, the median income earner, and then maybe even just, let's say, sort of middle upper, let's imagine, and I think that would put you, depends where you live, right? But let's say up to about, say, 250 per annum, let's imagine. I would say that on balance, relative to alternative places on earth, and let's assume you got friends and family and all that kind of stuff, your social ties, I think there's a good case, a strong case for Australia. The minute you start talking about millionaires, like people with shitloads, I start thinking, well, in the absence of strong social ties and those kinds of things, it becomes increasingly less attractive. And you may as well just immigrate to one of these islands, even like Vanuatu or Bali or something like that, something that could be a little bit more cost effective, and then just swinging across the ditch every now and then, making sure you get rid of all your ties. The ATO says, sorry, like there's literally no, there's no footprint here. But it becomes difficult because imagine, like, it's like going, I love Australia, but it cost me $500,000 per annum.
Yeah.
That's my fee. It's my pay to play to live here. You go, shit, you must really love it then.
Yeah. I think there's a lot of expats, and I won't mention, but one very well-known Australian Bitcoiners had that realization and realized that the grass is greener in another country, and he pays effectively no tax to be there, and he's setting up shop in another country, and he's absolutely killing it and crushing it, and I'm so happy to see it, and I'm really sad that he's left because he's such a fabulous asset for this country, for Bitcoin. Thank God he's still in Bitcoin, but he's crushing life and killing it and loving it, and he's like, why would I ever return?
Well, good on him, and I don't know if you got a chance to listen to the chat I had with Katie the Russian, but obviously, like everything, it's all about trade-offs, and one of the challenging things she says about immigrating is cultural assimilation. It's easy for me to assimilate in a relative sense. I'm coming to Australia. That was easy enough. Imagine she was saying like, oh, there's some hot areas she's like that she would look at, and sort of Eastern Europe and Serbia. And I was like, can you imagine landing in Serbia and going like, can I fit in here? And the guy's like, you know what I mean? Like, it's a different planet. So, obviously being a migrant, I think about this. All right. Let's talk a little bit of Bitcoin stuff now. So something that Luke Mikic and others have spoken a fair bit about is the money multiplier effect. I know Willie Woo's touched on it. And as I understand it, it's the idea that, it's not as if $100 million flew into Bitcoin, that its market cap would literally just rise in lockstep. That's the understanding. There is a multiple there. I don't know why it happens, and I'm hoping you can tell us a story about this, because I'm interested. Yeah.
So for many reasons, the multiplier exists. And so what happens, or what is the multiplier? Luke Mikic did fabulous work on this, so we should probably put him in the show notes, that article there. And last week, Rip Von Winkle did a fabulous tweet thread on this, talking about the multiplier. And in short, what it talks about is, for every additional dollar into the Bitcoin system, there is a multiplier effect on the market cap of Bitcoin. So people think, naively assume that for $1 in, it increases the market cap by $1. And that's not the case. It works slightly differently because of demand supply and how limited Bitcoin is. There's not a lot of Bitcoin sitting on exchange. There's a lot in cold storage. And this is why cold storage and self-storage, keeping your coins off exchange, is so critical in helping increase that multiplier, because how it works is, for every dollar into the Bitcoin ecosystem, there is a multiplier effect. Now, it might be $10, it might be $50, it might be $100, or 100 times the input creates an output 100 times bigger than the market cap. Now, the size of the multiplier depends on a whole host of things. Firstly, it depends on how big the demand is at the time. So the greater the demand at the point in time, the greater the multiplier is going to be. And an example of this, and I'm just going off very vague numbers, so no one quote me on this, but to give you a rough idea, an example on this, I think it was around April 2020 or 2021, there was a fat finger trade of about $100 million that just someone aped in, and you had $100 million of demand go into the market in one go. And it led to a $40 billion increase in the market cap in the space of 10 minutes. So that was a 400 times multiple, because there was a huge amount of money going into the system at that period in time. Now, if you look at Bank of America, I think Bank of America and British Hodl has done some work on the multiplier too, he's done some great work talking about it, that Bank of America thinks that for every dollar in, it creates about 119 or 120 times multiple on market cap on the back end. So all of a sudden...
Can I interrupt there, Pete? So what I think, are we talking here about a situation that on any given day, there's going to be people that are buying and they're going to be selling? And so what we're talking about here is if the weight of the people who are buying and not selling is, let's say, $1 more than the people selling, then the multiplier is going to impact the ultimate market cap. So in other words, that's what we're talking about. Because I'm imagining someone could do a fat finger trade, but at the same time, someone could do a fat finger dump.
They can. Whoops, sorry.
Yeah.
And it works both ways. So, and this is where it's really important to understand the multiplier in the context of what's coming in the next 2 years. And this is where the ETF money is really critical to understand and think about, that we talked about earlier, because the effect of ETF money on the multiplier, I think, is going to have a far greater outsized impact to the upside than we can possibly imagine. And I'll just run through a couple of reasons for that. Firstly, there's 2 million coins left on exchange. When that fat finger trade happened for $100 million 2 or 3 years ago, there were 3 million Bitcoin on exchange. So the less Bitcoin on exchange, the harder that thing's going to pump. Mm-hmm. Secondly, the market, for the ETFs, the 20 ETFs that are yet to gain approval, those asset managers across the 20 of them look after nearly $50 trillion in funds under management. Now, if we were to assume 1% to 2% is to go into it, we're going to see roughly $1 trillion try to enter a market where there's only 2 million coins on exchange. Now, if every one of those coins is for sale, that's going to give you a price of upwards of over $1 million. I think it's $2.5 million a coin. But those 2 million coins aren't for sale on the exchange. And the other thing is that ETF money represents institutional money and retail money from financial advisors. Need to understand how that money operates and works in the long term is really critical to understanding how that's going to affect the long-term price of Bitcoin. That money is really sticky. It's stable money. It's not hot money like hedge fund money that's going to come in and out of trades and try and ramp the market up and down and the rest of it. It's like a fire hose pointed at a wall that's just locked in place. It's going to be a flow of money that's coming into the Bitcoin market day in, day out, because a lot of it's going to be pension money and a lot of it's going to be investment advisors trying to get their clients into that. Now, assuming it's 5%, that's going to be roughly $2.5 trillion worth of assets that have got to find a home in a $500 billion market cap. Now, assuming even a 50x multiple on that, we're going to have a market cap of over $50 trillion for Bitcoin. That's 100x from where we are now.
Okay. Where does portfolio rebalancing come into the mix? Because presumably what could happen is, if that did happen, like it ran as hard as you say, there are going to be people who are going to say, let's trim our position, because now suddenly it represents, 10% of my portfolio or 15%.
If they're smart, the advisors will just let it run. That's what they should do, because they're only putting in 5% of the net assets, maybe 10% tops. And if that runs and goes vertical, you can play around and you can have a potential risk with maybe 5% of your portfolio to allocate, or maybe even 10% to risky assets. You look at alternative assets, and I might take a step back here. If you look at the future fund, nearly 20 to 30% of that entire future fund was allocated to alternatives, private equity, and all sorts of risky investments. And you look at that and you put that into contrast to an investment advisor's portfolio, all of a sudden they can put 10% of their clients' money into Bitcoin. And they've got approval from Larry Fink earlier, who said it's a flight to quality. So all of a sudden, that whole rebalancing thing is, potentially a non-starter. It might not be feasible. And then you've also got to consider that this is a nascent asset class that's coming into the market, and hedge funds and indices across the globe are going to have to get a position in it. And what happens when this thing's spiraling upwards and creating a bigger position in those indexes? The indexes have to buy more of it, which creates more demand and pushes it up further. And this is what we've seen with the Magnificent Seven over the last 12 months with, Facebook and Microsoft and Apple and Nvidia and the rest of it. Those things have massively outperformed. They've sucked all the performance out of the entire market. They're the only things that have gone up, and they've actually been caned the last month, but we won't talk about that. The last 12 months, they've absolutely ripped. And you compare that to the rest of the market, the rest of the market's done nothing. So I look at this and I think, what happens when indexes all across the globe have to have an allocation of Bitcoin because this is the new asset class and there's so little of it? All of a sudden they've got to buy it. They've got to buy it hand over fist, and then they've got to, it's a virtuous cycle upwards, because as the price gets away from them, they're clamoring to chase it. And if the Bitcoin psychopaths, have half a brain, they won't put their Bitcoin on the exchange. They'll self-custody it, and they'll watch all these institutions clamoring after the Bitcoin and paying stupid prices just to get exposure, because that's what they've got to get, whatever they have to.
Okay, so if we, because it's really nice to think about these things, because I've only had one bear market, but I must admit, there were times it was a little challenging, but it's awesome that we've now got these sort of tailwinds, and it feels as if sort of the FUD runway is slowly being cleared. You'll still have Pocahontas / Elizabeth Warren talking smack, and just it's not grounded in reality in the slightest. I think most people are starting to recognize that. What are we potentially looking at in the next sort of 2 to 3 years, let's say early 25, and let's assume some conservative numbers here and a conservative multiplier, like just for the sake of those listening who've heard some, there's a bunch of things that you've mentioned here, but in pragmatic terms, like when we're planning for the future and we're thinking, I want to know kind of, beginning of 25, like what is it likely to look like? What would you say is like a conservative valuation at that point per coin?
I think it's fair to assume it's going to be somewhere between a 5 to 10x from here. Like I don't think that's out of the question. I think there's a few factors that are sort of leading, thinking that that's going to be a fair assumption to have.
Mm-hmm.
You look at where we are at the moment. If you look at the multiplier, if you think, 500 billion, 1% of that $50 trillion is going to find its way into Bitcoin. And I think a lot more of it is in the next 2 years, but let's just say 500 billion. And we assume a very conservative multiplier of, 5x, that's a 5x return from here. So, that's pretty easy to think about. And if we're looking at USD terms, we're at 35. So 5x on that, circa 150,000. I think that most people would be happy or take that. But if you start to look at the numbers, then we could see something really wild. And, I sort of remember a conversation we had with Plan B. I don't know if I told you this or not, but we had Plan B come and talk to our clients nearly a year ago.
I think you've mentioned it. Yeah.
Yeah. And, 12 months ago, he said sort of the key takeaways from that conversation we had with him was VJ's a genius. He said there was regulatory concern around all altcoins. There was no regulatory clarity around Ethereum and everything subsequently downstream of that.
Yeah.
He said Bitcoin's the only one with clear authority from the authorities or regulators to proceed. So it's the only investable asset.
Mm-hmm.
And he said that by his calculations in the next 2 years, he said buy in October, which is interesting, and have a look at what we've had in the last month. It's just absolutely ripped.
Yeah.
I think it's up about 20% in a month. And he said, hold it for 2 years. And he said, by his calculations, he thinks somewhere between $100 to $1 million a coin is not, unfeasible within 18 months after the halving.
Wow.
And I look at that and I think he's been pretty much spot on with everything he talked to us about.
Fascinating. And I suppose the good problem that might be on some people's hands is a tax problem. Because that I hope for many people's sake that does become a problem, because a lot of us, I think, we can talk till the cows come home about hodling forever, I'm never selling, etc., etc. But the reality is, once you stumble into life-changing money, that it effectively kind of can de-risk the rest of your life and really just set you up for the future, so that you can't really fuck it up. You're actually just on the fast track. Like, there's going to be a temptation to take some cards of the chips off the table, rather, and myself included. And I tend to think, like, when I've spoken with people, I'm going like, listen, $1 million US min is before I take chips off the table, because I know I'll be kicking myself in a decade, and maybe, whether it's a decade or maybe 2 decades, but there will be a point where I go, actually, I'm going to now try and claim some profits, but I do know that it's going to present a monster tax burden and a problem, because nothing will upset me more than the ATO going, hey boy, congrats, you took the risk.
Give me my money.
Give me the money. But like, imagine you say, I took all the risk. I hodled like an absolute psychopath through, hell and high water. And then can I have 40% or 50% of that? You'll be like, my God, man. That's going to break my heart. So, who
knows? Maybe it gets reclassified as a currency and there's an amnesty on capital gains tax. Wouldn't that be sweet?
Well, absolutely, because that would certainly be a game changer, because the current tax regime and the way it's treated just totally puts me off wanting to sell. It's just too punitive. And I mean,
here's a novel and amusing thought for you, which I did try a few years back. I tried to ask the ATO to say that my denominated currency of choice was Bitcoin. So I wanted to claim a tax loss for all of the losses that I'd incurred in Aussie dollar terms relative to Bitcoin.
What did they say? I'm sure they were like,
fuck off.
Right, boy. Go fuck yourself.
Yeah, exactly. I was like, well, worth a try. So,
Absolutely. Oh man.
and this is where I'll tell you who wrote, and this has been rolling around my head for the last week since I looked at it, and we should definitely put it in the show notes, because I think as psychopathic as our Bitcoiners are, we do need to live a life, and it's really important to enjoy life as you go, and there's no point dying with, the most Bitcoin and not having lived a life. So there was an article Stacking Hats wrote, which is just continuing to blow my mind. He did an analysis of spending 10% of your stack from 2013 through to today. And in the worst performing time to spend that 10% each year, you ended up with 7 times the fiat than what you started with 10 years ago.
I saw that article, but I didn't click, and I feel terrible now. That's bloody genius.
Yeah, it is. And, we get so caught up in being so obsessed about increasing that Satoshi each year, because that's the benchmark of, that's the game we're playing. We've got unit of account as Bitcoiners is in Bitcoin, so we want more every year. But you know what, if you spend a bit on, life expenses, it might be an addition to the home, it might be a dog, it might be a holiday for the family, it might be looking after your parents, it might be, there's a million reasons to spend Bitcoin, and you've got to live a good life, be a good person, and if you've lived a good life and spent your Bitcoin and you've still got some at the end of the day, it's as long as you can sleep at night and you think it's worth it, you do you.
You do you. I know I agree with you do you, but what I also do say is, for the love of God, don't spend it on just consumable bullshit. Like, spend it on things that matter, that are going to materially impact your life. Like, most people that buy like a brand new car, they love the smell, they get in it and they drive, like, you can have like a 5 Series, an M5 here, and then like, 3/4 of the car's life, it's in 60 kilometers an hour. And I think like I would rather be spending my money on experiences and doing good, like stuff that's kind of like spiritually nourishing. Like when I think about fuck you money and my goals around that, I'm not thinking about like a car and whatnot. I love VWs and I'll always have a Volkswagen. And maybe I'll get a nicer one. But frankly, the Lambos and all that stuff, I don't need a yacht. I want to just like, I want to be able to do good and have great experiences and see the world. Like, I think travel is one of the most phenomenal things too. So anyway, I mean,
what I'm keen to experience, which I think you do a really good job of, and every time you post a pic on this, I get FOMO, is those nights out in the country with the fire. I'm like, that is living. Sitting around a fire with a great bunch of mates, probably talking about Bitcoin. And I look at that, I'm like, that is living. I love that you post those pics, and hope one day I can get up there for one of those.
We're going to do a Bitcoin bush bash, and we should do one around your neck of the woods. There was talk of one happening in the snowy mountains. It's sort of a rogue offshoot of mine. It's kind of just, it's giving birth to these little bush bash babies. So but it's so epic to see, and honestly it's one of the most fantastic experiences, because there's something about being kind of, I know it's a little bit hippier, but grounded, barefoot, around a fire, eating like quality meat under the stars and chatting to like real people. I don't know, so much more nourishing than if I went to a waterfront restaurant and had my, fancy steak. Like, for me, that's what it does. I get real nourishment out of that. But yeah, we want to see you there, Pete. I want to see you there in action.
I'd like to make it one day.
Awesome. Okay. So last thing I'll ask you, for anyone listening or watching, and if there was like one indicator or one thing that you say, listen, just keep your eye on this. There's a trend. Here's an index or whatnot, like what would you say they should just be keeping an eye out for?
To keep invested in Bitcoin?
Okay. Yeah.
Like, is that what the question is?
What I mean is, so like on a macro level. So if you're talking
macro level,
some of the macro stuff. Yeah. Sorry, I should have been clearer there.
On the macro level, I think it's really just having some education on either the interest rate or the inflation rate. The unemployment rate is just a made up number now. Like, it's just a complete furphy. Like that. They're not even trying. They just bullshit us left, right, and center. So it's like a lot of the numbers just are so rubbery. So I have very little faith in it. And this is where sort of, as time goes on and I understand more and more about Bitcoin, I'm happy to have a much higher percentage of my net assets in Bitcoin, because everything else is just, a very distant second on the trust scale. So I think a combination. I know you asked for one, but I'd have a look at, the inflation rate, have a look at the unemployment rate and interest rates. So inflation, interest, and unemployment, those sort of three things go hand in hand. And although they're fudging the numbers, they are readjusting them on a monthly basis, albeit 6 months after the fact. So no one's, paying attention, and gosh, but that's probably something to look at. But
Okay.
I think, what maybe more important than that is, just spend less than you earn, and then you don't ever have to worry about looking at that stuff. So if you're
That's
able to do that, then, everything else is meaningless.
Sage advice, although nothing in this show is financial advice, hey?
That's it.
I don't know. Awesome. Well, a real pleasure. We had a couple of sound issues from the outset, but I hope that we've produced something of good quality. But I know the stuff that came out your mouth today was top notch. Love the money multiplier. Bullish AF. So vibey. Loving it. Thanks as always. Appreciate you, man.
Great to see you, Dale.
Awesome.
Do it again soon. Cheers.
Yeah, cheers.
Thanks for listening to today's episode. I hope you enjoyed the conversation and that you got some value out of it. Either way, hit me up on Twitter and let me know what you think. My handle is Dale21M. If you've got any suggestions as to people you think I should be talking to or topics I should address too, I would love that sort of feedback. Otherwise, if you want to support the show, there's a couple different ways you can do that. The first is just to share it amongst your friends and family. The more that people hear the message that Bitcoin and crypto are not the same thing, the better. And I want to help people understand that. The second thing you can do is give me a 5-star review on whichever podcast app you're using. Of course, that's only if I deserve it. And last but not least, if you want to stream sats my way via the Fountain app, I'm not going to say no, but it's not expected. Thank you so much for your support thus far. It means the world to me. I appreciate the hell out of you, and the best is yet to come. Much love, friends. I'll see you on the other side.